Last week, I opened a bullish put credit spread on IGV. It's still sitting around break-even. But something happened on the chart this week that gave me even more confidence in the trade. Before we look at the chart, let's see where the portfolio stands after another week in the market. Last week, the portfolio closed at $118,094. This week, it finished at $119,097, up just around $1,000. That's less than a 1% gain. On the surface, it doesn't look like much. But investing isn't about making money every single week. Some weeks are about growing your portfolio. Other weeks are about protecting it. And I think this week was one of those weeks. Welcome back to Precision Capital. This is a public record of every investment decision I make as I try to turn $100,000 into $1 million. Nothing is hidden. Every win, every mistake, every trade is recorded before the outcome is known. If you want to follow this journey as it unfolds, subscribe. Every week is another chapter. And I post every trade to the community tab the moment I make it. So if you're subscribed and click the bell, you'll see it right away instead of waiting for the next video. Let's go back to last week's biggest decisions and see how they're developing. First, IGV. The trade is still sitting around break-even, but honestly, that's not what I'm paying attention to right now. What matters more is whether the chart is behaving the way I expected when I entered the trade. Okay, here's a fair value gap, an area where price moved so quickly that it left very little trading activity behind. These zones often act as support or resistance when price comes back to test them. This week, IGV pulled back into the fair value gap and then printed a bullish engulfing candle right off that level. A bullish engulfing candle is a strong reversal signal. It tells us buyers stepped in with enough strength to completely reverse the previous day's selling. So while the trade itself hasn't made much money yet, the chart is actually giving me more confidence that my original thesis is still intact. The second decision was investing nearly 95% of my portfolio. This one is very different. Unlike an options trade, there's no verdict after just 1 week. Whether that decision turns out to be right or wrong won't be measured over the next few days. It'll be measured over months or even years. So for now, nothing has changed. I still believe in the businesses I own, and I'll continue updating you each week as that story unfolds. Now, let's take a look at what happened in the market this week. So what happened this week? One of the biggest themes this week was the rotation back into AI stocks. The S&P 500 finished the week slightly higher, helped largely by the strength in AI stocks. My portfolio also finished the week higher, but it slightly underperformed the broader market. And honestly, that's not surprising. My portfolio isn't concentrated in AI. While I own companies like NVIDIA, Broadcom, and Constellation Energy, most of my capital is invested in software, cybersecurity, payment companies, and other long-term businesses. So when AI is leading the market, I don't expect my portfolio to outperform every single week. And that's perfectly fine. This portfolio isn't built to beat the market every week. It's built to compound over many years. Now, let's take a look at the portfolio. On the investment side, my biggest winner this week was Meta, up roughly 15%. On the downside, Palo Alto Networks was my weakest performer, pulling back around 10% after its recent rally. Now let's move over to the trading side. Going into this week, I had 4 open option positions: Palantir, SoFi, Celsius, and IGV. Overall, they're progressing exactly as planned. Palantir, SoFi, and Celsius have already captured most of their available premium, leaving only a small amount of profit remaining. IGV is still around break-even, which is completely normal for a put credit spread. With options, time decay accelerates as expiration approaches, so it's common for these trades to move more slowly in the early stages. Overall, I'm happy with how the portfolio performed this week. not because it made the most money, but because it's continuing to perform according to the plan. Okay, let's see what decisions we made this week. Unlike last week, I didn't add any new long-term investments. Instead, I made 2 options trades. The first was rolling my Celsius put position on Monday, July 6th. At that point, my original cash-secured put only had about $12 of premium remaining, but there were still 11 days left until expiration. For me, it simply wasn't worth keeping that position open for such a small remaining reward. So I decided to close the existing contract and roll it into a new put option with a $30 strike price, expiring on August 21. That allowed me to collect approximately $180 in additional premium. I raised the strike to $30 for 2 reasons. It made the premium worth collecting, and I'd be happy owning Celsius at that price anyway. My thesis on the stock hasn't changed. This was just position management, not a new investment call. The second trade was a bullish Microsoft put credit spread. On Tuesday, July 7, I opened 2 put credit spreads and collected a total credit of approximately $640. To build this position, I sold the $370 put and bought the $360 put, both expiring on August 21. This is a bullish option strategy, meaning I expect Microsoft to remain above my short strike through expiration. I'll explain exactly why I chose Microsoft when we get to the technical analysis in just a moment. Before we move on to Microsoft, I want to show you one trade that I didn't take. Last week, I told you I was watching the Philadelphia Semiconductor Index, ticker symbol SOX. My plan was straightforward. If buyers confirmed they were taking control again, I was prepared to add a position. Early this week, everything appeared to be lining up. SOX bounced from its 50-day moving average and closed back above it. At first glance, that looked like confirmation. A lot of traders would have entered right there. A few years ago, I probably would have too. But before placing the trade, I stepped back and asked myself one question. Where is the confirmation? As you can see, we'd only had 2 trading sessions since that bounce. One good day doesn't establish a trend. Neither do 2. I wanted to see buyers keep defending this level before I called it confirmed. Now let's zoom out to the weekly chart. On the weekly time frame, SOX just formed a bullish pin bar, often an early sign that selling pressure is fading and buyers may be starting to regain control. But by itself, a pin bar doesn't confirm a new uptrend. It's a signal a reversal might be starting, not proof that it is. Before committing capital, I want next week's candle to confirm follow-through. So I did something that's often harder than placing a trade. I waited. That decision didn't make any money this week. It also didn't cost me anything. I'm not trying to buy the exact bottom. I'm trying to buy once the trend proves itself. That's an important difference. Now let's look at why Microsoft met that standard, while SOX didn't. As always, before entering any trade, I follow the same 3 trading rules. Rule 1. Analyze the overall market. Let's begin with the S&P 500. The overall market continues trading inside the same range we've been watching for several weeks. We haven't seen a confirmed either breakout or breakdown. The market is still waiting for new information. That tells me I should stay selective, not aggressive. Now let's switch over to Microsoft's weekly chart to confirm Rule 2, finding the best entry. 2 weeks ago, Microsoft formed a bullish pin bar directly above a previous low. Last week, buyers confirmed that signal by producing another bullish candle. That immediately placed Microsoft on my watch list. So on the morning of Tuesday, July 7, I entered a bullish credit spread. My stop loss is around the $365 level. If Microsoft breaks below that level, I'll close the position and accept the loss. As you can see, right after I entered the trade, MSFT dropped below my entry price. Right now, this is a losing trade. The stop hasn't been hit, so I'm still in it. I don't know yet whether this turns around or I end up taking the loss. That's one of the things we'll check on next week. Now, let's look at the risk profile.
Let's focus on the green line and the box on the left. This shows exactly how much I can make or lose at expiration. If MSFT stays above $370 through August 21st, I'll collect the full premium of $640. Can you see it here? If I held the trade all the way to expiration and MSFT dropped below my spread, the maximum loss would be $1,360. That sounds like a poor risk-to-reward ratio. However, before entering this trade, I already knew exactly where I would exit if I was wrong. I'm not holding this position hoping the market comes back. I'm following a predefined trading plan. That's the difference between trading and gambling. I'm not planning to hold the trade all the way to the maximum loss. Like I mentioned earlier, I'll close the position if MSFT breaks below $365. As you can see in the risk profile, closing the trade around that level would limit my loss to roughly $368 to $422, depending on when will I close the trade. That gives me a practical risk-to-reward ratio of around 1 to 1.5, or even 1 to 2, which I believe is a solid setup, considering the trade has more than 60% probability of success. After going through all 3 trading rules, I believed this was a high-quality setup. So I entered the trade on July 1st. Now it's up to the market. As I look ahead to next week, there are 4 questions I honestly don't know the answers to. First, can Microsoft hold above support, or will my newest trade prove me wrong? Second, IGV just printed a bullish reversal exactly where I wanted buyers to step in. Will that momentum continue, or was it just a temporary bounce? Third, I've been waiting for SOX to confirm before entering another trade. Will the setup finally meet my rules, or will patience still be the better decision? And finally, next week is expiration week for my Palantir position. Will it expire worthless and let me keep the entire premium? Will I roll it forward for more income? Or will I end up owning the shares? Right now, I genuinely don't know which of those outcomes will happen. That's what makes this journey interesting. Every week begins with uncertainty. Every decision carries risk. And every episode reveals what happened next. If you'd like to follow the journey as it unfolds, subscribe so you don't miss what happens next. I make the decisions. The market writes the ending. I'll see you after the market closes next week.